um, I'll try to make sure all of them are answered before the webinar is over. So anyway, thank you very much for coming to the webinar today on the Compass Options Text Alert Service and live trading room, where once we get into the webinar a little bit, I'm going to go through Heiken Ashi candles. It'll probably take me 15 or 20 minutes to get to that point, and then we'll cover Heiken Ashi candles for a while, and I'll answer any questions you've got on that. How many folks here have used Heiken Ashi candles in their trading? Give me a yes if you use Heiken Ashi candles, you're familiar with them, and you use them to try to enhance your trading. All right, so we got a few people that use it. I don't think an awful lot of people use them, to be honest with you. And so I'm hoping that you'll learn something from this today. That's going to, whether you become a member of our service or not, it's going to help you to enhance your trading. So, all right, so here we go again. So this is the Compass Options Text Alert Service and live trading room. My name is Dave Wise, and I've been trading professionally for about 15 years. It's interesting. I'd like to tell a quick story about how I get started. I don't like to spend a lot of time on myself, but just people always ask me how I became full-time. Did I plan it out? I didn't. A lot of people plan to go full-time trading, and they have a detailed plan on how they're going to get into it. That isn't how I get started. I was working in IT. I was working for a company here in Charleston, South Carolina, where I live. That was a cloud computing company. We had dozens and dozens of servers where we serviced a lot of companies from all over the United States. And I worked in IT. I've been working in IT for many, many years. And about 15 years ago, in December, just before Christmas, and my boss, who I was good friends with, we had run into some financial issues. He was very competitive business, and he had to let me go. He had to lay me off, basically. He was laying me off. He said he hoped to have the financials pick up. So it was a good opportunity for me. It was about 2 weeks before Christmas. It was a good opportunity for me to start to trade full time. I mean, I had my setup at home. So I started trading full time. And December is not a great month to trade with the holidays and stuff, but I had a decent December. And then I started January and started trading, and I was trading every day. Trading mostly options and spreads, etc., and some stocks. And I finished January with a really, really good month, really good month of January. And then I went into February, and the February was going just as well as January, really strong. And about middle of February, my boss called me on the phone, said, you know, finances have improved, things were looking much better now. I could start back at work on Monday. And I told him I really appreciate that. I appreciate you having me come back to work, but I can't afford to come back and work for you anymore. I just can't do it. The trading has been going too well, and this was a good opportunity for me. So that's how I get into trading. I didn't plan on it. I probably would have stayed working if I was trading part-time, but I probably would have stayed working if I hadn't got laid off. But I did, and it forced me into trading full time, and it worked out well. It's much more stressful when you don't have a job and you're trading. But anyway, that's how I get started. So people ask me how I get started, so that's how I did it. Hey, Raymond, welcome. You're in IT for 45 years. Database administrator, cool, at Charles Schwab of all places. All right. So first I got to do the disclaimer, of course. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we're not going to be giving financial advice. All right, if you have any questions along the way, just post them in the question box. If you'd like to talk to Rory to get more detailed questions, or if it's a question I can't answer, just put your name and phone number in the question box or the chat box, and then or your Skype username, and Rory will call you back just one time just to answer any questions that you might have. Deborah, can this Can this be used in the Forex market? No, not in FX. In Forex, typically this is used for futures, stocks and options, obviously in futures, but I don't use it in Forex. Forex is a little bit different, quite a bit different. All right, so here we go. This is just a graphic representation of the Compass system, which is a system I use to track institutional trading. I run it on my Thinkorswim platform. This is what these are. It's just a graphic of that, and we call it the SPY Super System, where we track institutional money. And this is kind of just a graphic display of what the alert service looks like. I send out alerts. It goes an SMS text alert on your phone. Usually get them in about 15 seconds of the time that they go out. I have it on my phone as well, so I can track and make sure that the service is working efficiently. But this is where the alert service go. And all the trades come from for the alert service are the room are always called high probability trading setups. That's the only ones I take. So this I always cover, and if you've been in a webinar before, you've seen me go over this, but I like to make sure that everybody understands what drives the market. You know, there's two things that drive the market, or one thing that drives the market, really. But this is us. This is us. These little marbles are retail traders. This is me. This is you. This is probably everybody in this webinar today. We're retail traders. We as retail traders cannot move the market. We can't create trends. We can't stop trends. We can't do anything except create chop and chaos when we're trading back and forth between retail traders. We as retail traders, we don't want to be in the market trading when it's only retail traders in there. This big marble here, this is the institutions, and this is what drives the market. They have billions and trillions of dollars, but these are things, investment banks like Goldman Sachs, JP Morgan, Morgan Stanley, HSBC, all of the big investment banks are massive, and they have huge amounts of money, and they're trading all the time. And they have trading desks where they have actual humans trading, but they also have algos, or computerized systems that drive the market. And algos trade most of the market volume now. Most of it comes through algos. So institutions are the investment banks. They're also mutual funds. Vanguard, T. Rowe Price, all these mutual funds, they have billions of dollars that they can put to work in the market. They're part of the institutions. So are hedge funds. They're part of the institutions, all the big hedge funds. And on top of that, you have unions, for example, policemen's union, firemen's union, teachers union, all these big, huge unions that are investing. They invest lots and lots and billions of dollars. That's what makes up the institutions. And this is what moves the market. When these folks are deciding that they want to go long an index, or long a stock, or short an index, or short a stock, when they do this, in enough of them are doing it. You can't have one doing it and one not doing it. You have to have them in a fairly large group of them going in the same direction. This is what drives the market. And our job as retail traders, if we want to be profitable, is to find out when this is happening, when the institutions are driving the market, and trade with them. And what we do when we trade with them is we're not taking money from the institutions. We're taking money from these other retail traders who don't have the same information, or as good information as we do. Most of these folks have no idea how to determine if institutions are in the trade or not. They have no idea how to judge relative strength and relative weakness in stocks. No idea. So we follow the institutions, and we take money from the other retail traders. Listen, it's a zero-sum game, and we have the tools and the ammunition to take money from these other retail traders who are coming into the battle for trading stocks in the morning. They're coming in with a pop gun, and we're rolling in with tanks and bazookas, and they don't have a chance. All right, so I'm just gonna, before I get started, I want to just kind of show you the difference of candle structures for Heiken Ashi and regular candles, so you can just see what they look like. I'm not going to actually go into the details here. I'm going to do that a little bit later here in the webinar. But this is the SPY, the S&P 500. This is a relatively old one, but these are regular candles, and you can see the I color them differently than most people do, because I use the colors. And this is my TC2000 charts. I use this, and anything that's blue is bullish, and anything that's red is pink is bearish, as is red bearish and green bullish. But if they're blue or they're pink, it means that they're breaking out of compression, and the Heiken Ashi candles, I'm sorry, the candlesticks will change color to let me know that the Bollinger Bands are expanding and we're breaking out of compression. So these are regular candles. There's some more regular candles in the SPY. See back here where we fell down in April. All right, so this is what you look at when you're seeing regular daily candles. These are what Heiken Ashi candles look like. And this is the same one that we looked at initially, the first chart here, and here it is here. These are Heiken Ashi candles. You can see how easy it is to see the direction and how smooth this is, how smooth this smooths out. And we're going to talk about Heiken Ashi candles and what the construction is. But if you look at this candle here, you notice it had a little wick and a tail, and then you went to a flat bottom. These flat bottom candles are bullish Heiken Ashi candles. And that's what's called a bullish Heiken Ashi reversal. You go from a wick and a tail with a bearish couple of candles to a bullish candle with a flat bottom and moving up. These are Heiken Ashi candles, and this gives you that range. We'll be looking at a lot of these. Yes, this is being recorded, Raymond, sure is. And here's Heiken Ashi candles again on the second chart that we had showed. And again, if you look here, you see the wick and the tail on this little green candle. You see the flat top on this pink candle, a bearish candle. That's a Heiken Ashi bearish reversal, and you see how it follows through. And so this is good ways to enter trends very early, right? So we'll talk about that. Okay, so in the room and on the alert service, I have a couple of rules that we trade by. They sound pretty basic. We trade the best and we skip the rest, which means I'm only looking for the very highest probability trade setups that's gonna allow me to be profitable. The ones that have most likely to be profitable for me are the trades we'll take. And it's easy to say, it's not that easy to find, but I'll show you how we do find those. The second thing is, our objective is not to make trades. Our objective is to make money. Making trades, a lot of folks feel like if they're a trader, I've got to be in a trade all the time. They don't have the patience to sit there and watch the market, and they don't have the patience to decide that on a really choppy day, it's better not to trade at all. I mean, that's just the way it is. Otherwise, you're just risking money on very low probability setups, which are going to hurt you in the end. So our objective is not to make trades. Our objective is to make money by making only the very best trades. Okay? And we need an edge, and we talked about this already. We need an edge. Our edge is, I use what's called the right line compass system, which I'll show you. This is a piece of software that runs on Thinkorswim or Ninja, and it identifies when the institutions are in trades and when they're not, bullishly or bearishly. Second thing is we also trade what's called relative strength and relative weakness, and this is not to be confused with RSI. Relative strength and relative weakness is how is your stock performing on a 5-minute chart or even a daily chart, but on a 5-minute chart, how is it performing versus the S&P 500 or the SPY index? So if the SPY is moving sideways and down during the period of time, and your stock is moving up, then you've got relative strength, and vice versa on relative weakness. These two things together, being in the trade when the institutions are in there and taking the stocks that have relative strength and relative weakness, these two things right here give you a massive edge over other retail traders. Most retail traders, 99.8% or 99.9%, they don't know if the institutions are in there, and they don't even use relative strength and relative weakness. They don't know to even do this. The third thing is we try to trade with the market trend. If the market is trending bullishly, we want to stick to longs for the most part. And we also want to obviously buy near support and sell near resistance. We don't want to be chasing stocks that are bursting up or bursting down early. We don't want to chase them. We don't want to get trapped near the high. We want to wait for them to pull back. Stocks don't go straight up and straight down. Stocks will go up and then pull back, and go down and then go up. So what you want to do is wait till it comes to the level that's important for you, support or resistance level, and then think about entering the trade. All right, and we can use Heiken Ashi candles to help us enter in these situations. Okay, so again, the compass system looks like this, and I'll show you some charts that have the compass system on them. This is what I use to determine if the institution's in there. It identifies the highest probability setups while sidestepping setups that look good but are going to fail more often they succeed. And this is important. Being able to avoid trades is probably more important than finding good trades, because you want to sidestep those losing trades. And this is going to help you do that. And the compass does this by identifying when the institutions are driving the move and when they're not. If the institutions aren't in a trade, I'm not going to be in the trade, whether it's long or short. I'm just, when I enter a trade, the institutions have to be already in there as well. Now the compass system, it's going to analyze a lot of data, and I'll show you what it analyzes. But it displays the results of this colored codes that I'll show you. That's easily identifiable visual format. And this is really important, because for anybody who's a new trader or a trader that can't spend a lot of time looking at charts, being able to identify stocks that institutions are in bullish and institutions are in bearish, or if the institutions are not in, being able to identify that easily is going to help your trading dramatically. Okay, now again, this is how we get an edge over retail traders. We take trades that are being driven by the institutions, and I keep repeating this, but this is really important. This is what gives you trades that are going to be successful. You trade stocks that have relative strength or relative weakness to the SPYs or the Qs, and you trade in the direction of the market. Those three things are gonna make all the difference in your trading. How does it give us an edge? Well, our trades are going to be supported by institutional buying and selling. We're not in there with just retail traders having the thing chop around. We've got big money pushing the stock in one direction or the other, and we're able to ride that. These stocks will be outperforming the SPY or the Qs. That's relative strength or relative weakness, and they're going to be moving in the direction of the overall market. So this is how we get an edge over other retail traders. Okay, so this is how I find high probability trade setups. That's what I call a probability trade funnel setup. It's really just it's obviously not a real funnel. It's just something you visualize, and a checklist basically that you go through when you're looking for stocks to trade. The first thing I have to have is, if I'm going to be taking a trade, it could be all day, or it could be overnight, or it could be a week. In other words, it's not just a quick intraday scalp. Then the daily chart and the 5-minute chart have to align. So if I'm going long, that means the daily chart has to have a bullish setup. I cannot trade a stock long if the daily chart is bearish. Technicals have to tell me it's bullish, and then I want the 5-minute chart to align. So I wait for the 5-minute chart to become bullish, and that's where I'm likely to enter the trade. I'm going to trade with the trend, both the stock and the market trend, if there is a trend. A lot of times the stock market doesn't have a trend, so you get a lot of chop. When that's the case, I don't use the trend if there isn't one, obviously. But if there is, I'm going to trade in that direction. The third thing, and this is important, the compass indicators have to tell me that the stock is bullish if I'm going long. So I need the daily chart to be bullish, and I have to have the compass indicators telling me that it's bullish on the daily, and the institutions are in there buying it, and vice versa on shorts. And then you want to look for relative strength and relative weakness. And this is, you have to kind of look. I have a couple of scanners that I use in the compass system that look at stocks that are cascading up and cascading down. Cascading up stocks, if I run that scan and the stock market's going down, that's going to show me all the stocks that have relative strength versus the SPY right there, and vice versa on the relative weakness. So that helps me. And then I want to enter near support or resistance. And if the stock is far away from support or resistance, I'll just put an alert at that level. And if it comes to that level, I'll get alerted, and then I can go back and look at it and see if it's a good trade. So that's this. If you put a stock here and you look at all of these things and it meets them all and it drops out the bottom, then you've got a potential trade. Then you have to go into a little more detail, but that's what it gives you, right? So this is the funnel method for highest probability trade setups. This is basically just it's written out. So again, stocks to be traded have to have a daily and 5-minute chart aligned. I keep emphasizing this. This is really important. Look at your daily chart first, and the compass indicators must align in the direction of the trade. This is critical, and these two things right here are going to give you a much higher win rate than most of the other stuff that people follow. MACDs and RSIs and Fibonacci's, This is going to give you a much better edge than any of those things are going to do. And the stock should have relative strength and relative weakness, etc. So now, when you get going long on the stock, well, on the 5-minute chart, the stock price should be above the VWAP for long and below the VWAP for short. And that stands for volume weighted average price. And it's something that the institutions use all the time. And I have it on my 5-minute chart, and I'll show you how we use those. They're excellent support and resistance levels to enter trades as they break to the upside and short to the downside. But that's important. Now, these things don't apply to daily charts. They only apply to the 5-minute chart that I use. You can use them on 15s too, but I'm only using 5-minute charts. All right, so those are the key things, and have patience is key. Obviously, the stock, there should be no nearby support or resistance on the daily chart that's going to limit your profit targets. But having patience is really important, and that's what we do a lot of waiting. We just search and wait and wait. All right, so these are the strategies that I use in the room and on the alert service. We do straight calls and puts. We had puts on Apple yesterday that we took a nice profit in this morning. We took $1.10 a contract profit, I think. I do debit spreads using weekly options expiration. This current week, when I do a debit spread, the expiration is this current week. Pretty unusual. A lot of people don't know about using weekly options like that for debit spreads, but they're very effective. I use time spreads. Now, time spreads are basically calendar spreads. This is the only strategy that I use over earnings. Over earnings, it harvests the volatility crush after the earnings come out. This is a non-directional trade. I don't care whether the stock goes up or the stock goes down. We had Las Vegas Sands last night. We did a time spread on Las Vegas Sands. We get in at $24 a contract. We get out at $34 a contract, about 45% gain overnight. We get in this like at 3 o'clock yesterday, out at about 9:32 this morning, about a 45% gain. This is the only trading strategy I use over earnings. I have another strategy called the weekly ATM. This is basically just captures premium by selling puts every week against a longer term dated put. And I have videos on all of these strategies so that you can understand them. I don't want to go into a huge amount of detail on some of these because they're the criteria are very specific. And then I do credit spreads to capture premium over a few weeks. Most people are probably familiar with that. If you're doing a put credit spread, you sell a put and then you buy a lower price put, and you want the stock price to stay above that short put strike until expiration. And you capture the money on that. And then I have a thing called the SPY Super System. These are only trades that I call it in the room. This is not alerted. These are stocks for very, very quick trades, intraday trades over on the SPY or the Qs. I took 2 of them today, and I'll show you how that we work those. But I can't alert on them; they're much too fast. I do call them out in the room because folks want to trade that way. I have a lot of members that want to trade these intraday type trades off of the SPYs and the Qs, so I let them know when I'm getting into one. But I don't, I can't post the information or anything. It's much too quick. All right. So as far as the alert service, I want to talk about the alert service first. It's designed for day trades and short-term swing trades. So a day trade is a day trade. I mean, you get in sometime during the day, you get out at the same time, at the same day. And then short-term swings, which to me means overnight. Like Apple was a swing trade last night. We get in last night and we get out today. They have earnings next Thursday, so I would have had it been out by next Thursday. But it was a short-term swing. But short-term swing trades can also be a couple of weeks, 3 weeks, sometimes 2 or 3 weeks. That's about as long out as I'll go on short-term swing trades. The alert service is designed for traders who can't watch the market all day, who don't want to watch the market all day. People work. They want to be able to put in a trade. All of the alert service members got the trade on Las Vegas Sands last night. They get in for $24 per contract, and I gave them the exit to get out. I gave it to them yesterday so that they could have it working this morning when the market opened. Market opened, and they closed it out for $34. A big gain. I mean, that's a big gain. You do 10 of those contracts, it only costs $240. You get out for $340. Pretty nice trade, but that's who it's for. And I'm only going to alert on the very highest probability trade setups. in the room, I've got a lot more flexibility about how the trades I can call out, because I can make adjustments to them. I can get in and out quicker. But for the alert service, these are going to be highest probability trade setups that I'm not going to be trying to modify during the day, because a lot of people on alerts, they're working. They can't take an adjustment to a trade every 15 minutes or a half an hour or something. So these are only going to be the highest probability trade setups that I feel like I can stay in for at least a few hours. And again, how do I find the highest probability trade setups? I identify institutional involvement. We know about institutional involvement. Market internals, which tells me are there a lot more stocks being bought than being sold. And then I do some detailed technical analysis. So this is what the alert service is for. So the alert service, again, we trade the best, skip the rest. What you're going to get is every alerted trade will include the stock symbol, obviously, the option strike price that we're taking, the option expiration date, and the price to pay for the option. And it could be a range, could be $1 to $1.05 or something like that. But that's what you're going to get. When you get and usually I send an alert to get in and an alert to get out. Most of the time I don't send one alert with both the entry and exit price, because sometimes I've got to adjust the entry price because sometimes we don't get filled. Then you'll get another alert when we're in the trade and we want to get out of the trade. And I suggest when you get that you set it up as good till canceled. In other words, you want that trade to be working when the market opens the next day. So if you're not watching it or you can't be there, it's still going to work. So obviously the exit trades should be set up as good till canceled. The trade will close as soon as the profit target is reached. Okay, that's really important, because like at Apple today, we got filled today. We had the trade working. It spiked down on a fairly sharp candle to the downside, then bounced right back up again. But that spike down got us all filled on the Apple trade, and we get out. And 5 seconds later, it was we wouldn't have been able to do it. So you have to have the trade working. All right, this is a cumulative equity trade for the alert service since March 23. It's basically bottom left, upper right. This shows the profits. This is assuming $2,000 invested in each trade, and it's just a graphic to give you an indication of what the service has been doing over time. All right, and I'm going to cover the trades, some of the trades we've taken. I'm not going to spend a lot of time on this, but there's a couple of things I want to point out here on the trades, and that is I want you to understand what the expectation is as far as your profitability on trades are concerned. I don't want you to think that this is one of these webinars with somebody standing in front of Ferrari going to tell you that you can turn $500 into $5 million because all these trades are going to have 3,000% gains or 300% gains day in and day out. You can't do it. It's baloney. It doesn't work. There's no such thing. You have to be very disciplined, and the profits we take are going to be very, very consistent. You're going to see 20, 30, 40% profits. You're going to see some losers. We have losers, but you can see 20 to 30 to 40 to 50%. We did have 108% in STX. That's a little unusual for us. But again, these is the kind of percentages you'll see. A lot of these are intraday. Some of them are overnight, but these are kind of percentage gains you'll see. So this was September 2023. I just arbitrarily started here. We did 25 trades and 2 losses, 25 wins and 2 losses out of these trades with 92% win rate, and 2,000 invested in each trade created 7788. And it was a tough month for trading, September of 2023. But I'm just going to go through these fairly quickly so you can see how consistent we are as far as profitability is concerned. You can see the 24, 29%, 20%, 43%. This is a time spread, 28% time spread. We took a loss. So we had about 3 losses. We had 24 wins, 4 losses, 86% win rate in October, 4480 profits. And this is the key. Do we make money? That's what most people are interested in. November, very similar. Obviously, you can see the gains and losses, 21 and 4, 84% win rate. Now notice this had an 86% win rate. We made 4480. This had a lower win rate, but we made more money. And that's because of the market. The market was trending a little better, so we were able to take bigger profits in some of the trades we were in. But you can see the percentages staying about the same, and anywhere from 5% to typically 40, 50%. In December, very slow month for us. We didn't trade much. 14 wins and 2 losses. Again, 87% 87.5% win rate. You can see the win rate stays pretty consistent. 2,000 invested in each trade created $3,115 profit. And that percentages, again, are pretty much the same. We did have a nice 63% in Microsoft here. That's pretty high for this service. The time spreads, which I'll show you as we go along, the time spreads actually do a little bit better percentage gain wise. This was January. This was a good month for us. 20 wins and 2 losses, 90% win rate. Again, 75.05 profit. We got smoked on Gilead off of an FDA announcement, but you can see the percentage gains. It's 43, 10 here, 37, 32. Very consistent across the board. As Mara, we did have 65, and we did have a nice win in Boeing that month, 96%. But again, percentages, you can see how they stay consistent. This was February. This was one of our better months. I don't know if it's the best month, but this is one of the better months we've had. Again, we had 24 and 2, 92% win rate, 11,745 profit in February. You can see the profits and losses here. PayPal 56%, really nice. 50% in this time spread, 26% in this time spread. So we've had quite a few. We had quite a few trades that month, 62% in a queue, the queues. But I also broke out the alerted trades that month because we don't trade as many alerts. We don't have as many alerts as we have in the room because obviously we can't alert on every single trade. But the alerts, we had 20 wins and 2 losses and made 69.30. Pretty nice, pretty nice. I just kind of read this. I didn't post every single month, but this was I wanted to recap the 2023 results. This was investing 2,000 in each trade taken in the options room. Produced a profit of a little over 60,000. So if you had an account balance of 50,000, and I'm just using this just to show what percentage of your account was going into each trade, putting 2,000 into each trade, you would have been putting in 4% of your account balance into the trade. But as the year went on, of course, that 4% of your account keeps dropping because you kept making more money. And at the end of the year, we had 120% return on the initial 50,000. That's, we don't run best as quickly. That's a big deal. You don't find too many places where you can get 120% return. That's pretty high. So 50,000 grew to 110,000. So at the end of the year, if you were still putting 2,000 into a trade, you were only putting in 2% of your account balance. So that just shows you what we did in 2023. 2024, this was the first quarter. Right here, 65 wins, 11 losses, 86% win rate. It just stays right around there. 18.7 for total in the room. The alert service, 41 and 6, 87% win rate, 12,224. Pretty nice numbers. Second quarter, this was through June, 65 wins and 14 losses, a lower win rate here, 83%, but still very nice. 14.8 alert service. 35 wins, 6 losses, 85% win rate, 11,784. So that's last year and this year through the second quarter. Now I want to show I want to show you May, June, and July just because a couple of things here. I highlighted the time spreads, and it's important to understand how effective these time spreads are. But in the May, we had 15 wins and 2 losses. We only had 17 trades. 88% win rate, 49.79 in the alerts. This is the alert service. And in the room, we had 29 wins and 7 losses, quite a few more trades. 81% win rate, a low win rate. This is pretty low, but still $5,736 profit. But the room netted almost as much on quite a fewer trades. But notice the percentage gains on these time spreads. And these are over earnings, which is what we're in right now, which is why I did Las Vegas Sands last night. 71% on XP. We lost 100% on BKE. Thing gapped massively outside of the expected range, but 50% on HPQ, 30% on Hershey, Akamai 40%, 48% in AMAT, 38% in TJX, and 60% in GPS. So we had a lot of time spreads in May because there was a lot of earnings coming out. June, we just had 1 time spread. We're getting close to the end of earnings season, so we only did 1 time spread, 23% gain. But in the options room, we had 25 wins, 4 losses, 86% win rate, 75.90. The alert room, alert trades, we had 14 wins and 1 loss in June. We had a 92% win rate. We made more money on the alert service than we did in the room, off of 15 trades versus 29 trades. So that kind of shows that the alert service sometimes can outdo the room. Just depends. And this was July trades. I try to kind of wrap up some of these. July trades taken so far in the room: 13 and 2, 91% win rate, 57.52 profits. And the alert service, 8 and 1, 88% win rate, 33.72 in the room. But here's the time spreads we've had this month so far, because earnings season is going. We've got JP Morgan. We had this 41%. This was Abbott 50%, and Las Vegas Sands last night 42%. So we've had three of them 3 for 3 here this month, and pretty nice track record of these. So those are our trades, and those are the percentage gains that you can expect to see on both the alert service and in the room. And again, I want to go over how we get these kind of results. We get these results because we're only trading the very highest probability trade setups. So we're able to identify when institutions are driving a trade, and if the market internals are also heavily bearish and bullish and bearish. And we only take trades when both of these are in our favor. Actually, I'll take them when the institutions are in there if the market internals are neutral. They don't have to be bullish or bearish. So when they're in our favor, we get these high probability trade setups. This is how we do that. And how does the Compass system identify these? Well, we use what's called the triple screen assessment. Some people call it a fractal. It's multi-time frame. We're looking across multi-time frames, and we're looking across 3 different indicators. We're looking across momentum indicators, trend indicators, and money flow indicators. When the momentum indicators across multiple time frames, for example, if we're looking at a 5-minute chart, it's looking at the 5, the 15, and the 45. All 3 of those have to be moving up in the same direction, and they all have to be moving up at about the same pace for that to be determined the institutions are in there. When you add the trend to that, the trend also needs to be moving up across multiple time frames. And then the money flow, the derivative we use of money flow, also has to be moving up. When all of these are moving up across multiple time frames, like 5, 15, and 45 on the 5-minute, then you've got the likelihood of about 98% that the institutions are in that trade. Once that information is available to us, we know the institutions are in there. That answers one of our key questions. This is a Tesla chart right here. This is really to introduce you to a couple things, the Heiken Ashi candles, but also the Compass system. And this is what the Compass system looks like. This is a long-term trend. This is multi-time frame momentum right here. This is current time frame momentum right here. And this is a derivative money flow right here. Notice they're all green. This is a 5-minute chart. I know when I glance at this, it doesn't take a genius to see that the institutions are buying Tesla today. And you can see here the little red candlesticks, it's the dojis. And I get a pop out of the box symbol. The Compass system produces this pink arrow when you get a stock that's breaking out of compression. And these are Heiken Ashi candles, but when it pops out of compression, that would be an entry for me. And this is where we took the trade right there. And we rode it all the way up until it started to put in wicks and tails. These are Heiken Ashi candles that we're going to talk about. We went from a wick and a tail to flat bottoms. And notice on a trend with Heiken Ashi candles, you keep getting flat bottoms. Flat bottoms tells you that it's still bullish and it's still in a trend. Now we got wicks and tails, we're telling we're losing a little bit of momentum here, right? So this is what they look like. And I'm going to show you a bunch of these Heiken Ashi candles, but this is what it looks like on the Compass system, and this is what the Compass system looks like. We got green and blue for bullish, red and yellow for bearish, and you'll get to see some of those. All right, so let's talk about Heiken Ashi candles. What's the advantages of Heiken Ashi candles over standard candlesticks? Well, big one here is it identifies confirmation of a trend reversal. If you're just watching for individual candles and you're looking for example, a breakout through resistance or a bounce off of a support level, if you're just looking at one candle, it's very difficult to know whether that's going to be work or not, or whether it's going to fail. If you're using Heiken Ashi candles, which take 2 candles into consideration, once you've got a Heiken Ashi candles that confirms a reversal, you're going to have very few likelihoods of it being reversed on you. Not very few, but it's going to be much less likely that will reverse on you. So again, it allows trade entries on a confirmed reversal, avoiding failed breakouts. This is a big deal. If you've traded much, you've probably been in trades that look like they were beautiful. They're going to break out and they turn right around and head back down again. We're going to be using Heiken Ashi candles when we try to find these breaks to make sure that it's confirmed. It smooths out the price movement to eliminate noise, as you've seen right here. No noise on these candles. It allows the trader to stay in the trends longer, avoiding shakeouts. If you watch your Heiken Ashi candles and they stay bullish, you don't have to worry about a couple of little blips on the regular candlesticks. And identifies waning trend momentum to exit for profits, as we saw right here. That's a waning trend. You could stay in, it's still bullish, but you could also, if you had a good profit, you could take it right there. And it makes it much easier to visualize the current trend. Right, so you use Heiken Ashi candles in collaboration with other indicators. Your VWAP, if you run the daily chart, your 50, the 100, the 200-day moving averages, those are all taken into consideration along with your Heiken Ashi candles to determine whether the trade is a high probability trade or not. Right, so that's how they have advantages over standard candlesticks. All right, so that's important. Now, if you've not used Heiken Ashi candles in your technical analysis, you may want to try using these things. And every platform allows you to switch to Heiken Ashi candles. It's just you just select the Heiken Ashi as opposed to regular candlesticks. And it means Heiken Ashi means average bar in Japanese. It's got basically two candlesticks that it smooths out. So again, it smooths out the price action and the reversals become clearer. So it eliminates a lot of noise and makes it easier to see the trends and stay in the trades. I mean, it's fairly simple. If you can follow the trend longer, you can stay in for longer profits. As I had mentioned, I'm gonna show you this visually so it'll be easier to see. But bullish Heiken Ashi candles have flat bottoms, and bearish Heiken Ashi candles have flat tops. This is always the case. Bullish trends will have flat bottom Heiken Ashi candles one after another, and bearish trends will have flat top Heiken Ashi candles one after another. Generally, you can stay with a bullish trend as long as no flat top candles appear, and that would be a Heiken Ashi reversal to the bearish side, and vice versa for bearish trends. If you got, in other words, if you've got a bearish trend and you got flat top candles coming down, then you can stay in it until you start getting some flat bottom candles moving up. And I'll show you a lot of examples of these. So again, yeah, reversal in a bullish trend. So if you're in a trend bullishly, if you want to determine if it's reversing, it's going to have a flat bottomed Heiken Ashi candle followed by smaller doji Heiken Ashi candles, which have both wicks and tails, followed by a flat top Heiken Ashi candle. And you could go from a flat bottom candle to a flat top candle without the dojis, but generally there is some dojis in there. That's going to tell you that the trend has reversed. Okay, so in the doji candles indicate momentum is slowing and time to be prepared to take profits when a bearish Heiken Ashi candle occurs. And it's important to understand when you're following Heiken Ashi candles, if you have a lot of, let's say you're in a bearish trend, you get a lot of big red Heiken Ashi candles coming down, and then you get a reversal, a flat bottom green candle. If the Heiken Ashi candles coming down, the red ones were pretty big, fairly large size. You don't want to just take that reversal on a tiny little Heiken Ashi green candle. You need to have Heiken Ashi green candles that are similar in size to the downtrend that you were in, because a lot of times they won't work if you get big huge candles coming down. There's too much momentum, and the little green ones are not indicating enough buying to offset that trend yet. So you want a couple of green candles or a couple of big green candles. You want to be aware that the price on the stock on the Heiken Ashi chart, when you have an Heiken Ashi chart up, is not going to reflect the actual price. The actual price is going to be different because the Heiken Ashi candles are using two candles to calculate the price. It's not going to be off by more than a few pennies, but you would look at your regular chart to make sure that you're looking at the right price. All right, so again, there are other nuances to using Heiken Ashi candles in trading, but try looking at some of the charts at Heiken Ashi, and we're going to go over them now. And I think you're going to find it useful. You know, I have in my trading room and on the alert service, I have a video on Heiken Ashi candles and how to trade them. All right, so, and I've had about a 90% win rate focusing on Heiken Ashi candles. All right, so I'm not going to go over. This is the same kind of thing we're talking about. We're talking about the Heiken Ashi candle heights has to be as large, preferably larger than the prior candles that occurred prior to the reversal. You know, this is, if you're used to candlesticks, you know, if you got a lot of big red candles coming down, you're not going to jump back into a trade on a tiny little green candle that's reversing to the upside. You need some confirmation that there's some heavy selling, buying coming in. And obviously the stock should be taken on when relative strength. This just says using Heiken Ashi candles, make sure that you're including your other criteria, relative strength, compass system being in the trade as well, institutions being in the trade. All of those things need to be included. You just can't trade off of the Heiken Ashi candles by themselves. You need other things. So that's what I talk about here. The relative strength, right? The compass system is telling me that the institutions are in there. And I would suggest that when you're in the trade, to switch back to standard candles when you're getting close to getting out. If you think you've made enough profit, Heiken Ashi is looking good, switch over to regular candles and try to get out when the momentum starts on the regular candle, because you have to wait. If you're waiting on the Heiken Ashi candles, you got to wait for 2 candles, and you could lose some profits if the bearish Heiken Ashi reversal takes a couple candles to form, and when you're trading options, you know, that could reduce your profits some. So I switched over to regular candles when I'm ready to get out of the trade. All right, so I think you're going to find a very profitable strategy if it's done correctly with the criteria that we talked about, the high probability trading setups, and I think it's very, very useful. When I found it, it improved my trading quite a bit. All right, so we're going to talk about the Heiken Ashi actual physical setups here of Heiken Ashi candles. This is just a graphic. And these are the candlesticks. Now, a couple things. Every candlestick that you see when you have a Heiken Ashi chart, the current candlestick's always going to start in the middle of the previous candlestick, just like that, just like that, just like that. But this is a bearish trend. See the flat top? That's a bearish Heiken Ashi candle. But now we're getting some wicks and tails here, but it's still bearish. I haven't seen a reversal yet, a Heiken Ashi reversal to the bullish side. And then I get another flat top candle. Now, this is not a Heiken Ashi reversal. This is a Heiken Ashi continuation. This is a bearish continuation. We have flat top, wick, flat top. This just tells you that the bearish trend has been confirmed again, and then you just stay in this trade. It's flat top, flat top, flat top, flat top. Now we start getting some green candles with wicks and tails. Right? I'm not jumping in here. Another wick and a tail, another wick and a tail. Now we go to a flat bottom candle. This is your Heiken Ashi reversal candle off this downtrend right there. That's where it does. Now notice it starts right in the middle of the previous candle, but now you've got a flat bottom. Now you're back bullish. Nice big candle, about the same size as these other red ones. Another Heiken Ashi candle, a flat bottom Heiken Ashi candle. Another flat bottom, another flat bottom, another flat bottom. A beautiful Heiken Ashi trend to the upside. That's what a Heiken Ashi reversal looks like. Right, and I just put it in graphics here so it's easier to see than it is on charts. So there's Tesla we talked about before, using Heiken Ashi reversal right there on the 5-minute chart. That's where you took it, and so you see how nicely that worked. And this was a Heiken Ashi reversal on the daily chart. This is daily. We had a wick and a tail here, flat bottom. This was a Heiken Ashi reversal on the daily chart. On Gilead, this means it would be a potential for a swing trade. You want to take it overnight. This was a bullish reversal on GE off the daily chart. You see just a bunch of chop here. Wicks and tails, flat bottom, another flat bottom, moved up beautifully. Compass system, by the way, produces a shaded area. This is called a dynamic compression zone that on the 5-minute in the daily chart that it puts out. So you can see when you're in the compression zone. This was a Heiken Ashi candle on IBM. This is my TC2000 chart. But the reason I did this was because I drew this line here. This is called an algo line. I draw these this is what the algos use for support and resistance. Notice how it's coming down. You see how we pop through it here? That's a Heiken Ashi candle right there. See the little green wicks and tails, flat bottom, that's a Heiken Ashi reversal. We took this to the long side because we had a Heiken Ashi reversal on the daily chart, and it became a nice swing trade for us. And this was Teva, same thing. This white line, by the way, is an 8 exponential moving average that I use on my daily chart to basically follow the trend. But here's a nice Heiken Ashi reversal on Teva right here. We traded this one. This, we did this in February. Flat bottom after flat tops. That's the Heiken Ashi reversal. Notice no dojis here. Flat top, flat bottom, but a big candle. Nice run up right there in Teva. All right, so I'm going to look at some live charts here for Heiken Ashi candles. So let me bring over TC2000. I'm going to bring this over, and I'm going to run a scan off screen here so that I can show you some trades. Here. All right, I'm going to look at a couple things. This is going to be just a daily chart. I'm going to look for a bearish reversal. I'm going to pull this thing and I'm going to move it over here. So, oops, so I can see them and just click on them. All right, so these are daily charts. Okay, so let's go to the this on the daily chart. Here, this is a regular daily chart. Take that out of there. This is a SPY today. This is a SPY today. Now this is a daily chart. So I'm going to just click on the charts that I have here. I'm just sorting by volume. I want to see what looks like a Heiken Ashi reversal. Now these are regular candles. These are Heiken Ashi candles right here. Right. So here's this, how's the SPY ended up today. Pretty bearish finish to the SPY. You notice you've got bearish tops here. Flat bottom, flat top, flat top, flat top. All right, so here's the scans that I saw. This was EW. Let's switch to Heiken Ashi on the daily. All right, so here's Heiken. This was earnings. Obviously, that's a big, huge Heiken Ashi reversal on the daily, but it's earnings, so you got to be a little bit leery about that. Palantir also showing a Heiken Ashi reversal yesterday and today to the downside. If I switch over to the regular chart, this is where I see Palantir right here. But now notice it did kind of put in a doji today, so it's not something I'm going to probably trade short. But I just want you to see what the Heiken Ashi candles look like. So this Heiken Ashi there. This is Amazon. Nice bearish move here. You see this is a Heiken Ashi reversal right there. See how nicely it followed through. These are nice. I mean, this is a nice Heiken Ashi reversal that you can take right here, and it followed right through. Get a little pop up here 2 days ago, and then right back down again. And so that's a nice Heiken Ashi reversal. Well, Bank of America putting in a Heiken Ashi reversal today. Warren Buffett selling a bunch of Bank of America. It's telling us, we can see that right here. There's the Heiken Ashi reversal right there on that top of that candle right there. CCL, Carnival Cruise Line, Heiken Ashi reversal there. You can see that it's reversing to the downside. And you see most of the time when you get a flat bottom candle like this with Heiken Ashi reversal, you get some follow through on the daily. You get a few candles at least to that same direction. All right, WBD. So I'm just randomly going. This is a scan. It's showing me everything that's got Heiken Ashi reversal candles today. I don't know whether they're good trades or bad trades, but that's how I'm finding the Heiken Ashi candles. There's gold. Looks pretty bearish. That's the 50-day moving average, the red line right there. And this is my TC2000 setup. Red line, blue is 100, purple is a 200. You can see it's coming down. But what I'm interested in here is that it's a Heiken Ashi candle reversal. Wick and a tail, flat bottom, flat top, pretty good sized candle. Over here we had a bullish candle right here, bullish reversal. So that's what I look for in these things. Riot also coming down. VRT coming down. Virtual Holdings, you can see that. There's a daily chart right there. See that breakdown? So that's the daily, that's the bearish ones. So let me go ahead and run a scan for bullish. We can look at the bullish. See what we've got. There are probably not as many bullish today. Right there on the daily, bullish reversal. Move it over here. All right, so sort by volume. All right, Pfizer, bullish reversal. Nice look right there on Pfizer. BKTX, big biotech, big reversal, big volume here today. That's the volume candle right there. That's a big move up in that. And trade KDP. That's Dr. Pepper. Getting Dr. Pepper, nice Heiken Ashi reversal here. See this nice bearish Heiken Ashi reversal here? You see the follow through in those candles? These are what you want to ride down. When you want to get in them early, they ride down and they follow through. You can do really well. Again, these are daily charts. This was one on Coca-Cola. It's already bullish. This is basically a bullish continuation as opposed to a bullish reversal. Right. So just kind of skimming through these is Altria. Nice one here. It's been bullish, kind of compressed. Now we're bullish again to the upside. If we look at the daily chart, there's the daily chart. Looks like it's trying to break out. Right, so those are some of the bullish trades. Let's see, Gilead. Yep, Gilead, another nice Heiken Ashi candle to the upside, breaking out. Was bullish here, chopped around, took off again. J&J as well. So this just kind of shows you what these Heiken Ashi reversals look like. IBM had earnings, beautiful Heiken Ashi reversal candle right there. Pack B as well. Now I want to run this on 5 minute so we can look. And I'm going to look at the 5 minute candles for bullish because it was a bearish day. So we'll look for some 5 minute bullish reversals. All right, so let me bring this up and let me switch over to my 5 minute Heiken Ashi chart. All right, boom, this is my Heiken Ashi chart on 5 minute. All right, so let's sort. Now this is going to be a little bit confusing because of the fact that, first of all, I'm going to switch this to regular hours. I don't want to have after hours. All right, so this was bullish chart on MSTR in 5 minutes. But this is, I got to rerun the scan because this is, I got to go to the after hours again because that's what it's scanning on. So let me show that. So that's why you see this Heiken Ashi reversal there. But let's look at URI. After hours, see that bullish reversal. Tiny little one down here, very, very tiny little one on Clack. And Hubs and Vertex. So it's really pretty hard to see. Let's go back. Let's go back to the SPY, so I can show you something on the SPY. Because I traded the SPY today, and I traded the SPY off of these Heiken Ashi candles and also the regular candles. And this is where I actually traded it right here off of this reversal right here. And I just stayed in for, I did this in the room. I stayed in it for just this run right here. And that particular run netted me over 90 cents per contract, $90 a contract on the SPY by trading this off the 5 minute chart. So you can see the moves in the SPY. Now I wouldn't be trading the SPY long today because it was red at the time. So I was looking for some bearish setups, but you had nice bearish setup toward the end, nice bearish setup here. And I also traded the IWM long this afternoon, right here off of this bounce right here, off of that 8 exponential Heiken Ashi reverse. I just rode that up. So those are some of the SPY super system trades we use. But that's what Heiken Ashi candles look like, and that's how you can use them to improve your trading. I mean, they're very, very useful. All right, so we looked at some live charts. I also want to look at some of the recent trades we've taken in the room and on the alert service, and I want to show you the Compass system and how they were set up and how we identified them. This was workday right here. We took a 5-day trade here. This is a daily chart. We're in for 30% profit. We actually took it right here on this candle. Notice we had blue here and blue here at the time. And then this switched back and forth, so we had to be cautious. But this current momentum for the current time frame, which was a daily chart, stayed blue and green the whole way through. So we stayed in this, and we stayed in it 5 days for 30%. And this is MDT. Again, we took it right here. You see how we went yellow on this was bearish current time frame, bullish current time frame. Went from yellow to blue. Bought it here, and we rode it up 25% profit on this trade as the stock just kind of meandered on up. VKTX, we just saw one of those. VKTX here today. Here it went to green. Everything was green. Institutions were in there buying this. We bought it here on this big candle. This was a daily chart, and 30% in 3 days. We just rode it up for 3 days and get out. McDonald's. This was just an overnight trade. Again, we had everything green here. The institutions were buying the heck out of this. Notice that the institutions can be buying, and the stock doesn't necessarily have to go up right away. This usually portends that there's going to be some upward movement, which is what happened here. So we bought it here, we got out here, we get in for 8.30, we get out for 11.30, 37% gain overnight. And this was a 33% gain here, moving from the Moderna. Again, you can see the yellow and red, everything's bearish. Bought it here as it broke down. We don't use the VWAP on the daily, breaking down under this little white red line. And this is the 15 EMA. That's a trend line that we can use as support and resistance. All right, Amazon, nice 32% gain on Amazon. We just traded this intraday. This was off this candle. We just traded it in that day, out that day. 32%. JD, 61% here. Again, we just traded this for this day trade right here. That was a nice gain. Again, you can see we went green to yellow. You see that green to yellow, bullish to bearish on that daily chart. We knew that the institutions were now selling. We already had massive selling across multiple time frames. The trend was down. The money flow was down. This went to yellow. That tells us that it is now short set up to be taken. And Dollar Tree, 25%. Same thing. You can see how easy it is to see the institutions selling here. This was 21% here on Datadog. Broke out of this dynamic compression zone. This is a dynamic compression zone that the Compass system produces. If you have the Compass system, you get this on your chart. And it broke down right here. We took 21% profit in that. You can see everything is yellow and red. Institutions are selling. Crowd, institutions are buying. Now we had a little bit of chop here, so I have to be cautious when I get in on a blue and it switches to yellow. I got to be cautious. Now I didn't get out because I still had institutional buying here on the current time frame, but I had to be cautious. But it was okay. I mean, I just got a one candle and then it moved right back up again. So you get 20% profit on that. 32% profit here in Amazon, 45 minutes. This is a 5-minute chart. Again, this works on all time frames. 5-minute chart right here. Everything went green except for the long-term trend. And that was off because it had been chopping around so much. But I bought it right here as it popped off. This is a 5-minute chart. This green line here is the 15 EMA of an EMA. It's a smooth EMA trend. And it was a pop out of the box symbol, so I could buy it right there. I didn't buy it here because you see I had a yellow here. But it went to green here, then I bought it, and then I took 32% profit in 45 minutes on that trade. All right, so this is ENPH, same thing. It gets repetitive, I know, but I want you to see how easy it is to identify institutions in here selling. When you've got these breakdowns, just a 5-minute chart. See, it's compressing right here. Pop out of the box symbol, telling me it's breaking out of compression. Institutions are selling. I take it, and I get 20% in an hour on that trade. Verizon, this was a 50% profit in 1 hour. Verizon options are very inexpensive. In the money options, we had in the money options for next weeks that were very inexpensive, 45 cents. We traded for 1 hour, we get out 1 hour later, $450 for 10 contracts, out for $670 in an hour. Pretty nice. And this is just the SPY super system setup I was telling about. Again, we had a SPY super system set up right here. Notice that everything was red. They were selling. It was below the VWAP. This is a 5-minute chart. The price is below the volume weighted average price. That's incredibly important. And I teach this stuff all day long in the room as far as how to find these setups and how to trade off them. But this was a below the VWAP, a pop out of the box symbol. The institutions were selling the SPY. I jumped in here and I write it down for, I don't know what I got for this, but it's a pretty, I mean, 410, 47 down to probably about 408 or so. So that's pretty good. A couple points on the SPY is nice. So that's how that worked. And Netflix, again, this was a 20% profit. Same kind of setups. You can see we went from blue, bullish, to yellow, bearish. Stops coming off the VWAP on a 5-minute chart, breaking down, and you buy it right there. As it turns yellow, buy it right there, and you write it on down, 20% profit right down to here. And Tesla, this was a day trade. We got in here. This was late in the afternoon on a pop out of the box symbol as the stock broke down below the 15 EMA, below the VWAP. Institutions are selling. You can see they're all selling. We write it down, 30% profit. And then we had an overnight trade in Tesla where we actually took it off the 5-minute chart. We had a pop out of the box symbol late in the day. The institutions were selling. They had yellow and red across the board. We took it overnight, which is a little bit more risky, but the daily chart was bearish, and we got a drop from 120 to 112 overnight. So we had a huge gain in Tesla on that trade. I think $7.50 at $750 a contract profit on Tesla. And this Tesla, again, this was a long setup on Tesla that we showed earlier. Heiken Ashi. So just so you see the Heiken Ashi, now you can see the compass system. I just kind of want to get you familiarized with these kind of setups and how we use them in the room and on the alert service. And this just kind of shows you how we use it daily in the 5-minute. This is QSR. You see right here, it went to blue on the daily chart. This is a daily, went to blue. You've got a nice green candle. So we knew we wanted to trade it long. This was the 5-minute chart. We're deciding where do we want to get into this trade. All right, so we're watching the stock compress, riding along this 15 EMA. Then I get a pop out of the box symbol right here. Everything's blue and green, so I get in here. Now I had to watch it, went to yellow briefly because of this compression, but then it kept on going. So we get into this QSR. This is where we get in, and we were long QSR. We actually took it overnight. So that shows you this is what the daily chart tells me that okay, I can trade it long. You notice all green. I can trade it long. Where do I want to get in? I can get in right here, and then I can just stay in the trade. Or I can take profits during the day if I wanted to. All right, so that kind of wraps up everything I wanted to cover. Again, the strategies we use: straight calls and puts, debit spreads, time spreads over earnings. This is of capturing volatility crush. Pretty nice strategy. And again, this produces a little bit higher returns than the other strategies do. Weekly ATM, I won't go into details about that, and credit spreads and the SPY super system. So this is where all the trades on the alert service and out of the room will come from. And in the room, I'm there all day long, from market open to market close, and people post stocks they want me to look at. We look at the charts, share them on the screen, so everybody can see exactly what I see, and explain why this is a good trade or not a good trade, or when it would become a good trade. So we try to do a lot of education. You also have access to a Discord room where we have 2 other professional traders in there, also posting charts, looking at the sectors, trying to doing top-down analysis on sector stocks. So there's a lot of really good information that you can get educationally and to help you trade. All right, so again, there's the alert service, and what we're going to do is I'm going to tell you what you can subscribe to these for. There's a 3 different things. This is the alert service itself. Quarterly, it's $4.98, and you saw the profits that we're getting out of this thing. So $4.98 for a quarter, annually for $14.96, $14.96, right? Lifetime. If you want to get in for life, $24.96. You never have to renew again. This is you saw the numbers we were producing here. So $60,000 a year with $14.96. That's a pretty small investment. Excuse me. But that's the alert service. If you want to get in the trading room, an alert service, by the way, gives you 1 month in the trading room. It gives you the Discord chat, and it gives you access to all my videos, which is about 25 or 30, and about half an hour each. That goes into tremendous detail about all of the strategies that we use and how to use the indicators, how to use the compass system, how to use Heiken Ashi candles. All of that is identified there. And then this is the live trading room, 50% off a year for $11.98. Pretty nice for a whole year. Also includes the Discord instant messaging and the wide way to trade options, which is all the videos. And the room, you can try it for a month for $148 if you want to. I personally don't think that's long enough time to test it out, but they offer that, so that's there. And again, $11.98 for a year. And you're going to have the Discord messages where all the trades that I alert on are also posted in the Discord room, and also all the trades posted in the room are also in the Discord room, so you can see all of them there. And the last thing is the actual trading system itself, and this is the compass system. It runs on Ninja Thinkorswim. I use it on Thinkorswim, but this is it's gonna look exactly like my system looks that we looked at. That's gonna show all the indicators. It's got scanners that goes with it. I'll show you them live in just a minute. But compass trading system will give you a month in the room live. Also the Discord and the alert service and also you're going to get the videos, same as everybody else, and you also get the scanners that I'll show you here briefly. But you get my workspace, which means they'll load up the compass system on your TOS and on your Ninja. But if you do it on TOS, it's going to look exactly like mine. It's going to have all the indicators exactly the same way that I've got them. It's going to have all these scanners as well. All right, so there's the actual compass system, the software. This is the trading room itself, and this is the alert service. If you want to be in the alert service, this is where you would sign up for that. And there is in the chat box, there is links to all of these three different offers, and you can take advantage of that. The sale ends on Sunday, but these are pretty good prices right here, right now. So again, there's a link in there, the chat box to all of these particular offers. And I do want to show you the system here now. All right, so this is what the compass system looks like on my chart. If you get the compass system, this is what you'll see. This will be displayed on your screen during the day. Here's all the scanners. This is the cascading up scan. This is another scan I've got here, looking for stocks that are breaking out of compression up and down. These refresh all day long, and then I have the new yearly highs. But I can switch these out to different scans all the time. But these will be running. This is the chart that will be up there on your screen. This is the SPY today, ending at 4 o'clock. And again, if I go back and show you that I took the SPY this morning short. I took it right here short. Notice the pop out of the box symbol. See the VWAP right there, pink line. Broke down below that. I took it short right here. I get out right here. As soon as it turned around, and that little bitty drop right there, I get in for $364 a contract, and I get out for $554 a contract. A $90 profit per contract, just in that little bitty move like that came right off of the VWAP with a pop out of the box symbol. Everything red. I mean, everything's lined up. The SPY was red at the time, so that's how it works. So that's what the compass system will look like on your system, right? So there you go. You get the alert service, $498 for a quarter, $14.96 for a year. You've got the trading room itself, $11.98, $148 if you want to try a month, and this is really inexpensive for what you get. Like I said, I'm in there. I don't know too many rooms with a person who's trading is on there all day long. And I take lunch, but I'm still watching the market. And I trade every trade that I call out in the room, or every trade that I post, or any trade going to the alert service. I take them live in my trading account. I don't trade off of Thinkorswim. It's important to understand that you can have Compass on your TOS system on the Thinkorswim, but you don't have to trade through it. I just use it for the indicators, and then I trade through a system called TradeHawk that actually uses Tradier as my trading platform, because I don't pay any commissions, so it makes it kind of nice. All right, so those are the offers. I appreciate you folks being here today and taking the time to listen to me. I hope the discussion on Heiken Ashi's helped a little bit. I know it's quick. There's a lot more detail I could go into, but I'm just, I don't want to take up everybody's afternoon, but I do appreciate everybody coming into the room. I appreciate the questions and the comments, and I hope to see some of you folks in the alert service or in the trading room come tomorrow or Monday. We got another day tomorrow. I've got another time spread on tonight on Bristol Myers. We'll see how that one works out. But again, you can see the results have been pretty dramatic. I mean, at 85 to 90%, I stick to that pretty closely every month. I mean, I've had a few months 81, 82, but generally speaking, it stays in there pretty nicely, and we make profits just about every single month. I said we've had 3 small months with small losses, but I think that so we try to make this so that it's helpful, it's educational, and then anybody can get into it. It's inexpensive enough to get in there, and you can do it with the room, you can do it with the alerts, or you can do it with the compass system and trade it off yourself. All right, thanks very much, everybody. I appreciate it, and we'll see you folks in the alert service or in the room in the next few days. Have a great night.